Okay, so just to start with, we've got this T-charts, right? The debits and the credits. So assets, expense accounts, and drawings all have the debit as the plus side. Liabilities, capital, and revenue all has the credit as the plus side. Okay, so you have this sheet. I gave it to you with like a plastic wrap, but just to remind you that you have that sheet so you can keep this straight. So instead of doing notes, I'm just going to jump right into the practice because it's just easier to explain it showing this way. So what you've got here is somebody who general journaled a whole bunch of transactions. Okay, so somebody used cash to pay off the bank loan. Somebody advertising sales, so revenue brought in $3,000. Accounts payable, so you charged something, put it on a charge account and accounts payable, and your cash went down. Or you paid, sorry, you paid in accounts payable because your cash went down. So you've just got these transactions. Okay? So, general ledger. What I'm going to do is I'm just going to pull up what the Google Classroom looks like just to show you what's happening here. Just give me a second. Let me open it up. So right here, so under your assignment, so you're on assignment number 5. The general ledger is this right here. So if I just open that up, here's the thing with the general ledger. So you've got these tabs at the bottom. So they say assets, liabilities, owner's equity, revenue, and expenses. Each asset account has its own little ledger. Okay. So in 1015, so in our first module, what you learned to do was you learned to put the account name right here, okay, the account number right there, you did the date, you wrote opening balance. Because it was an asset account, the opening balance went on the debit side, and then you wrote the balance here, okay, and you did that for every one of your accounts. What we're going to do now is we're going to take those accounts and put them into the general ledger. We're going to take those transactions and record them in here. So I don't know how to split my split screen button doesn't work, so I'm just going to have to go back and forth. I'm not going to do all of them. You'll get the gist of this fairly quickly. So I didn't give you the opening balances on this. Actually, sorry, the opening balance was given as part of the practice. Okay. So my first transaction, I'm debiting bank loan and I'm crediting cash. Okay. So what I would do is I would, does it give me the date? So October 1st, so check number 12. So the item is check number 12. It's October 1st. This G1 is from the fact it's, so G for general, I'm on page 2. So you would go G2 because it's general journal page 2. And then it was crediting $500. So you're going to go credit 500. Now, because these are asset accounts, remember asset accounts, debit is plus, credit is minus. So you're going to take your calculator and you're going to go 2106 minus 500. Okay. And you get 1606.31. So what you're going to do is you're going to keep a running balance, like a running tally. Now, the accounts payable was a debit of 500. Sorry, the bank loan was an accounts payable. Oh my. Bank loan was a debit of 500. Bank loan is a liability. Okay. So underneath, so in your, remember how the general ledger had those tabs at the bottom? You would click the liability tab and you would find the bank loan. So this is under the liability tab. Okay. So again, it was October 1st. It was check number 12. And it was debit 500. So we're going to General Journal page 2, debit 500. So remember, for all liability accounts, credit is the plus, debit is the minus. So we're going to go 30,000 minus 500. So we're going to have 29,500. And you're simply going to go through every general journal entry, flipping them into the general ledger. So if we just do another one, so cash and advertising sales. So this is an asset, this is revenue, right? Sales or your revenue account. So we're going to debit cash 3,000. So asset, what was the date? So October 5th. So October 5th, we're going to debit cash 3,000. And what was the source document? Receipt number 21. Now, for assets, debit is a plus. So we're going to take our 1606 and we're going to add $3,000 to it. So it's going to be 4606.31. Okay. So I got that one done. So revenue is being credited 3,000. So you would find the revenue tab. So the revenue tab, advertising sales. So it was October 5th. It was receipt number 21, page 2, and it was credit 3,000. Now again, remember, for revenue accounts, the credit is the plus side. Okay. So essentially, that's the opening balance of the revenue, because revenue and expenses don't start with an opening balance. Only your assets, liabilities, and capital do. Okay. So now I've got that one done. And I would just keep going through, recording all of those. Does that make sense? Okay. So let's pretend we did that, because I don't want to do all of them. Okay. But do you understand what you're doing, right? You're just taking those accounts and creating a running balance. So once you've done all the transactions going through, you are going to have a final balance. So you're going to have a new balance. So once you're done your transactions, you're going to write new balance, right? So it's, well, actually, you don't even need to do that because you're doing a running balance. So whatever your last transaction is, okay, that's going to give you a final balance in that account. Okay, so as long as you keep a running total, you'll have a final balance in each one of your accounts. So the new form that we need to talk about is something called the trial balance. Okay, so the trial balance, again, it's who, what, when. So the name of my company, did I even give you? Oh, it's Chew TV. Okay, so Chew TV. What is the trial balance? And when, it's the after the last transaction. So the last transaction was October 29th. So October 29th. What's the year? Well, it doesn't give it to us. So let's just say 2025. Okay, so what you do is you go through now and list out all your accounts. So you do the assets first. Whoop. Then you do the liabilities. You do all the owner's equity, the revenue, and the expenses. And you don't have to like tab in or anything. You just type them all in. So my asset accounts were cash, accounts receivable. So I'm just going to go cash, accounts receivable, studio equipment, mobile equipment, office furnishings. Now you're going to write the full word in. I'm just doing shorthand. And then you're going to switch over to liabilities. So you got accounts payable and bank loan. That's it. So accounts payable and bank loan. Then you're going to do your capital accounts. So you've got capital. This one should say Duke Farrell Drawings. I'm sorry, I don't know why I didn't put that in there. Okay. So you've got dude's name capital, dude's name drawings, and then you've got your revenue account, which is advertising sales, and then you've got your expense accounts, which are 1, 2, 3 expense accounts. So, okay. What you do over here is you put their new balance in under each column. So assets will all have a debit balance. Liabilities will all have a credit balance. Okay, so these will all be debit. Accounts payable will be credit. Capital will be credit. Drawings will be debit. Revenue, so revenue will be credit. And expenses will be debit. So once you put all of these new balances in, what you do is single line, new total, double line. And if they are not the same, then you have screwed up. So what it is, this trial balance, it kind of marries together the concept of a balance sheet with the concept of a general journal. It kind of goes and sticks them together. Okay? So that is the final piece of this second module, is taking your general journal entries, putting them into a ledger, doing a running balance, and then once you're done, you take those final balances and put them into the debit column or the credit column, and you'll have done it right if your debits equal your credits. Make sense? So here's the assignment. So that's what it ends up looking like. So these were my final balances in each of my accounts. So again, you can see assets are all debits, liabilities are credits, capital is credit. There must have been no drawings account. There must have been no transactions using drawings. So that's why they left the drawings off. But if you did have a drawings, so if you had a drawings account, it would go right here and it would have a balance right there. So drawings are debit. And then revenue is a credit balance. Expenses are debit balances. Ignore these dark lines. That was just me clicking on the computer. And then use your calculator to add up this column. Use your calculator to add up this column. They are the same number. Double line under each. Okay? You don't have to indent anything. You just type it in. Okay, so here's your assignment. It's kind of big. So you're going to run a hotel. So Waterfall Hotel is the name of your company. These are all of your accounts. So you've got a bunch of assets. You've got 2 accounts payable accounts. So these are people you owe money to. You've got your name is Rita Ricardo. You've got a capital account, a drawing account, income summary. Don't worry about income summary. We haven't used that yet. Income summary, we're going to play with it in our next module. Okay, so just ignore it. You've got 4 different revenue accounts, so 4 different ways of making, 3 revenue accounts. Then this is that, this is that cash short over. You use this, remember, with your petty cash. And then you've got 4 different expenses. Okay, so those are your accounts. So what I've done is given you a whole bunch of transactions. Okay, an entire month's worth of transactions. So what you are going to do is you are going to take those transactions and put them into a general journal. So the first thing you're going to do, okay, you're going to take all of these, okay, and you're going to do a general journal. So just like we have been. So you're going to decide, what are you debiting? What are you crediting? So you're going to do a big, huge general journal for all of those. Then, once you have done the general journal, you are then going to take, you're going to take your, so your general journal will look like this. You're going to take your general journal and put them into your general ledger. Once you have done that, with your new balances, you're going to create a trial balance. So this assignment is 3 things. Whoops. You are going to do general journal for the transactions. You've done 3 of these now. Okay. Once you have done the general journal, you're going to take those numbers and put them into the ledger. Once you have the new final balances, you're going to put those into the trial balance. So 3 steps. General journal first, then general ledger, then the balance sheet. So if you look at Google Classroom, you will see that there's the general journal, there's the general ledger, there's the trial balance. So you do journal first, ledger second, trial balance last. Okay? So I'm going to give you about probably Monday, Tuesday, Wednesday to do that. And then towards the end of class on Wednesday, I will go through your final project with you, and then you'll have another 3 classes to do the final project. So pretty much the next 6 days are just work periods. Okay? Questions on that? We're good? So what you could take time right now doing, we got about 20 minutes left in class. What I recommend you do is look through and decide what you're debiting, what you're crediting, and just write it on your page so that when you come to class on Monday, you can immediately pick up and start with your putting in your general journals. So let's do the first one together. You're establishing petty cash. So where does that $200 come from? What are you taking it from? Your cash. So is it called cash? Yes. So sometimes it's called cash, sometimes it's called checking account. This time it's called cash. So cash is going to get credited, and petty cash, which is right here, petty cash is 1,003. Petty cash is going to get debited. Okay. Okay, received cash from room sales. Remember, you're running a hotel. So room sales is revenue. So you received cash. So which account's going to go up? Cash. So cash is going to get debited, which means the revenue account for room sales is going to get credited. Dr. Woloshin stayed in room 401. Room rate was $100 per night. He stayed for 4 nights and will pay at the end of the month invoice number 1. Okay, so paid for 4 nights. So that's going to be $400. Okay. Now, he hasn't paid you yet. He's going to pay you. So somebody who hasn't paid you yet, that is an accounts receivable. They owe you money. Okay. So you did room sales. So even though you haven't received the money yet, you still record it as revenue. Okay. So credited will still be your revenue, room sales. Your debit will be your accounts receivable, whatever that dude's name was. Woloshin. right? So now, and the reason why you're debiting it, so now he owes you even more money. So he owes you $400 more, and revenue is also $400 more, right? One debit, one credit. You receive cash from coffee shop sales. So cash is going to go up. Now, coffee shop sales, that's another one of your revenue accounts from the coffee shop. Okay, so coffee shop is another one of your revenue accounts. So you're going to credit another one of your revenue accounts, the coffee shop. Okay, so you guys keep going on that. Decide what should be debited, what should be credited. That way, when you come in on Monday, you can just immediately put these into the general journal with the source documents, and then you can transfer those to the general ledger. Okay? Do you have any questions? Okay, so work on that for 10 minutes till the end of class, and then we'll see you Monday.